It is 8:12 a.m. Pacific Daylight Time. It's the 27th day of the 7th month of 2026, and this is episode 1360 of Bitcoin, and with me, your host, David Bennett, bringing you all the news that you can use about Bitcoin and other macro from around the world. Today, we're going to start out with an article about Fidelity backing the Crypto Clarity Act, and then, the State Department, we'll get into the State Department, debuting a Freedom Tech program. You're going to be kind of interested to hear about the partners on that one. One, you would imagine. The other one, not so much. Strategy back in the news, doing a fifth, I think it's the fifth pause that they've, weekly pause that they've had on buying Bitcoin. But just so you know, they didn't sell any either. In the second part of the show, blockchain patents were purchased from IBM. I'm not terribly excited about who bought them, but it is news, so it's something we need to watch. And in AI news, Claude outscores Fable on benchmarks and does it cheaper. And then the sad news, Storj. Storj filing for bankruptcy. If you've been in the Bitcoin space and on this one, you'd have to be in the Bitcoin space for quite a while to remember the company called Storj. Yeah, they're filing for bankruptcy. It'll, there's only so much life that shitcoins have to them. And we are starting to see, well, we've been seeing cracks in the shitcoin world for quite a while, and they always seem to bounce back, and they probably will bounce back too. Again, it's like Jesus, the shitcoiners will always be with you. But Storj was one of the ones that have been around for a long time. Been around for a very long time, and they are finally calling it quits. But let's get into the lead story. $7 trillion investment giant Fidelity has backed the new Crypto Clarity Act. Okay, what's new about it? Matthew DeSalvo from Bitcoin Magazine, tell me more. Investment giant Fidelity is the latest big player to back the latest version of the long-awaited Clarity Act. The Boston-based firm's public policy account on X said Friday that it was urging the Senate to pass the bill. Lawmakers have been hashing out the crypto market structure bill since last year. A new and improved draft circulating the Senate this week bans officials and their families from issuing or promoting cryptocurrency, a sticking point for opposition politicians. Quote, "The time is now for clear rules of the road that are essential to strengthen investor confidence, providing certainty for market participants, and reinforcing U.S. leadership in global digital asset markets," the company said. Fidelity was joined Friday by crypto advocacy groups, the Crypto Council for Innovation, the Blockchain Association, and the Digital Chamber, as well as the National Fraternal Order of Police and other politicians backing the bill. Let me pause, because if I remember correctly, the National Fraternal Order of Police was one of the groups that signed a letter in opposition of the older version of the Clarity Act. So it looks like they've come around, and yet I still don't quite understand why the police department is all interested in this. I mean, the police, okay, your civil police are not the guys that are investigating terrorism or this and that. That's sort of FBI kind of stuff. So why the Fraternal Order of Police is in this, I just don't know. But top asset manager Fidelity is interested in the bill as the firm manages Bitcoin as well as other digital asset exchange traded funds, products which give American investors exposure to crypto via shares that trade on, stock exchanges. The SEC approved a number of spot BTC ETFs in 2024, which have since gone on to become some of the most successful ETF launches ever. Republicans passed the Clarity Act last year, but the bill has been deadlocked, mainly because banking chiefs raised concern over stablecoins and the yield that they would potentially pay customers. Coinbase pulled the support for the bill in January after clashing with banking bigwigs who said that earning yield on stablecoins should be banned. U.S. banks argued that they could lose customers if crypto exchanges like Coinbase offer more attractive products for their deposit base. Some lawmakers, like Democratic Senator Elizabeth Warren, have argued that President Donald Trump's family has unfairly benefited from crypto ventures. Well, what would fairly benefit from crypto ventures look like? I think that word is an interesting choice here. Anyway, Warren this week argued that the Clarity Act could further be used for Trump to cash in on crypto, but the latest draft bans officials and their families from issuing or promoting crypto. That's the end of the article, and it's going to be really interesting to see what Elizabeth Warren thinks of this new language. I'm sure she'll find something wrong with it, but the biggest question for me is there a grandfather clause? Or would Trump and Trump's family members have to completely divest from World Liberty Financial if this bill were to pass and he signed it into law? And there's absolutely no language that I've heard of at all that says, okay, we got to backdate this stuff. So any of the politicians that are into, that have issued a meme coin or have something like World Liberty Financial, you got to get out. I haven't seen any language to suggest that. But then again, I haven't read the bill. I'm not going to read 1,200 pages or however long this behemoth is probably weighing in at. Still, if anybody knows, please, boost the show and let me know through the Boostagram. On to the State Department, who's going to debut a Freedom Tech program with Bitcoin Policy Institute and Palantir as founding partners. This makes me nervous. Matthew DeSalvo from Bitcoin Magazine. The U.S. Department of State is launching a program that includes Bitcoin as a way to advance digital freedom worldwide. Named the Freedom Tech Excellence Program, the initiative will see the State Department work with the Bitcoin Policy Institute, data analytics firm Palantir Technologies, defense technology company Anduril Industries, and the Victims of Communism Memorial Foundation on issues including online surveillance, encryption, AI governance, and protecting free expression online. Let me pause. Anduril is also sketch AF. We're talking shady as it comes. Palantir, I think everybody that's on the other end of this microphone pretty much understands why they're shady. But if you haven't heard of Anduril Technologies, this thing is really scary. They're kind of like, they do all kinds of stuff, but one of the things that they also manufacture, or at least I don't know if they're manufacturing the hardware, but they're into warfare drones. And we're talking like autonomous firing drones. We're also talking about the potential of having target selection and the reasoning behind that target selection also done by the software, which I assume has onboard AI and or machine learning technologies on board. So this raises every hackle, every hair on my body from my ankles to the back of my neck are standing on end, not just because of Palantir, but also because of this Anduril Industries company, because both of them are scary AF. Bitcoin Policy Institute, I get. That makes sense. But Victims of Communism Memorial Foundation? I can kind of see it, but it seems I don't know. It seems like it would be something more like out for Alex Gladstein and the, or people like the Electronic Freedom Foundation or EFF. I can't remember. Electronic Frontier Foundation. I can't remember what EFF stands for, but it's for freedom of software and speech and all kinds of neat stuff. But wow, dude, Anduril and Palantir, it's worrisome. Continuing, according to the program's stated goals, participants will focus on 5 priority areas: First Amendment and free expression protections in the digital age, countering unlawful digital surveillance and online scams, privacy enhancing technologies such as strong encryption and VPNs, responsible governance of emerging technologies, including artificial intelligence, and safeguarding children and other users online. Oh, it's for the kids. The inclusion of Bitcoin Policy Institute signals that the department views Bitcoin and blockchain technology as tools relevant to circumventing censorship and financial surveillance in authoritarian states, a theme the organization has long championed in its advocacy work. The FTEP will operate through limited term assignments, placing private sector personnel inside the State Department on temporary embeds tasked with shaping diplomatic efforts around specific digital freedom issues. President Trump campaigned on a ticket to help the crypto space, and since taking office, his government has taken a more pro-crypto approach to both regulation and including elements of the space in his administration. In March 2025, President Trump signed the executive order establishing a strategic Bitcoin reserve, which I may remind you hasn't done dick since. I'm not saying anything other than calling balls and strikes. It's just facts on the ground. Yeah, he signed the executive order. Yes, Bitcoiners around the world rejoice. And yes, we're still waiting for something concrete to actually be done with the strategic Bitcoin reserve. But the order framed Bitcoin alongside strategic reserves the U.S. maintains for materials like gold, petroleum, and pharmaceuticals, which I find interesting, treating it as a scarce national asset rather than merely speculative. Okay, that's great. That sounds fine. I'm sure we'll all be fine with Palantir and Anduril Technologies championing our freedom of speech. Yeah, I'm absolutely certain that that's going to happen. Could it be that they want to be part of this because they want to make sure that their authoritarian, totalitarian data collection schemes are, basically secured and safeguarded? No, that couldn't possibly be it. It makes me want to go lift, which you can do with Workstr. Yes, Workstr at app.workstr.fit. That's app.workstr.fit, F-I-T. app.workstr.fit. Circle P is open for business. Circle P is where I bring plebs, just like you, that have goods and services for sale, to other plebs just like you who want to buy those goods and services, but you will be buying in a Bitcoin, because if you're not selling in a Bitcoin, you're not in the Circle P. Now, Workstr's different. They're not, right now it's basically free to use. It's built on Nostr. Yes, on Nostr. And no, it's not social media. It's for you and your workout, going to the gym. It's how to say this. If you've ever had an app that you can use to track, how many sets of, what exercise you did, and if there's weights involved, what weight you were using, maybe the day that you went, blah, blah, blah. Well, Workstr, using the Nostr protocol, basically gives you all of that. And right now, as far as I can tell, it's free. I'm not, you just log in with your Nostr account, or, your Nostr identity. There's no accounts in Nostr. It's your digital identity, and everything you do on app.workstr.fit is tied to that identity so that you can see it. Now, that said, one of the most interesting things that I found about this thing is I actually don't need my Nostr ID. I don't need my npub. I don't need my nsec. I don't have to have that because it seems to kind of generate a digital ID for whatever device you happen to be using. So you can still get the benefits of having the data saved. And as long as you still log in with the exact same phone and you don't expect to try to get that data from any other device, then the data that you store there is there for good on relays that the Nostr network utilizes to do all the cool stuff that Nostr does. And again, this isn't social media. I can basically go to exercises. Like there's a tab that says, after I get in, there's a tab that says exercises. And there's a library, but I don't have anything in my library. So I can go to the Discover tab underneath exercises, and I can import all kinds of different exercises, some with weights, some without weights. Like I can import the air bike, which works out your cores. I can import the all fours quad stretch, which works out your quadriceps. Now, once I've got it in my library, I can go to it and I can say, I can input my body weight, I can actually start using the whole thing. And at the very bottom, I can say, I can delete it, or I can go back to where is it? I can select it. No, wait, hold on for a second. I had this. Yeah, I had it. Oh, I know why. Once I've got it in my library, this is what I'm struggling here, guys. Sorry. Once I have it in my library, I can actually start I can go into that and I can start the workout. And like I've got a full body workout in my library so far. I'm not using the air bike or the quad stretch or anything like that. I found a full body workout that has 4 exercises in it. So I can kind of like have a menu. Now underneath this menu, I've got a dumbbell squat, I've got dumbbell lunges, a dumbbell hammer curl to press, a dumbbell lateral raise, and there's a button down here where I can start the workout. Now, once I get into that, I select when I started the workout, the first thing it wants me to do is 4 sets of 8 at 15 pounds, the dumbbell squat. So I can go in and I can change how many reps I'm doing for each set. I can change the weight for each rep. And once I'm done, I have a button over here that says log, and I can log it. Now, once I log it, it gives me a rest period. It's like a countdown. And this rest period is like 90 seconds. But I can adjust that. I can subtract 15 seconds from it. I can add 15 seconds to it, or I can hit the button to skip the rest. Then it drops down to the second dumbbell squat set. And again, I can adjust how many reps I do and how many weights or how much weight that I use. This basically keeps track of the workout session that I've done. And then I can go back to it and look at stats. I'm sure that they're going to add other stuff. It's everything that I've actually ever wanted in a workout app, except it's free. It's built by plebs and it runs on Nostr. Go to app.workstr.fit. That's app.workstr, WORKSTR.FIT, and try it out. Try it out. Go get healthy today. Strategy sells MSTR shares, but it also buys back 25 million in STRC preferred stock. I don't think I've seen this one before. This is written by Helen Parch from Cointelegraph. Strategy, the business intelligence firm that has built the largest Bitcoin treasury, continued adjusting its capital structure last week through a combination of stock sales and preferred share repurchases. Strategy sold 5.4 million shares of its Class A common stock, MSTR, through its at-the-market offering program between July 20th and July 26th and generated $544.5 million in net proceeds. The MSTR share price was up more than 2% in Monday's pre-market activity, according to Yahoo Finance. The STRC preferred shares were up 2.3% to $88.90, right ahead of the open on NASDAQ. The company also repurchased 288,900 shares of its STRC preferred stock for $25 million, according to a Form 8K filed with the SEC on Monday. The update comes after Strategy Executive Chairman Michael Saylor sparked more speculation on Sunday with his "we're gonna need another color" post on X, which some market observers interpreted as a hint at a new move involving the company's preferred stock strategy. Following additional capital raises through its ATM stock offering program, Strategy increased its U.S. dollar reserve to $3.75 billion as of July the 26th. That is up from $3.225 billion the previous week. However, Strategy reported no Bitcoin purchases or sales during that July 20th through 26th period, leaving its holdings unchanged at 843,775 Bitcoin. Strategy's growing cash reserve highlights management's efforts to maintain liquidity as it expands its capital markets activity through common stock offerings and preferred stock instrumentation. The reserve is intended to support dividend payments on preferred stock and interest payments on the company's outstanding debt. The update came shortly after Saylor reignited a debate on whether banks have a place in Bitcoin's future after arguing that the crypto asset's growth depends on integration with traditional financial institutions. Saylor wrote on X on Sunday that rejecting Bitcoin's links to financial infrastructure would deny access to most potential users. His comments drew criticism from some BTC supporters who contend that greater involvement from banks conflicts with the network's original goal of enabling transactions without intermediaries. Several users pushed back against Saylor's argument by citing Bitcoin's white paper, which introduced the asset as a peer-to-peer electronic cash system designed to remove the need for financial institutions. The exchange highlighted a growing divide between advocates who view banks as necessary gateways for mainstream adoption and those who see them as a threat to Bitcoin's decentralized foundation. Now, that's the end of the article. But this one, I got two ways of seeing this whole thing. I don't think his comments that we need traditional financial institutions for Bitcoin and crypto's continued growth. I don't think his comments actually mean what everybody thinks they mean, because people are putting way too much stock into whatever Saylor says. And every time he opens his mouth, people go, "Oh my God, it's the end," or "Oh my God, the bull run is just beginning." Stop listening to Saylor. Saylor doesn't control Bitcoin. Whether he likes BIP 110, he doesn't. He actually hates it, or he hates BIP 110. I don't care about that either. It's not going to change the temperature of the water in my bathtub. It's just not. So on the other side of this, though, is I don't understand why. Well, actually, I do understand why the proponents for BTC are freaking out. But honestly, I think it's misplaced. I think the energy should be directed into building more. And what should they be building? The same shit that we've always been building. The ability to pay each other quickly and without any intermediaries involved using Bitcoin on the Bitcoin network. That has not changed. I can buy Bitcoin. I can sell Bitcoin. I can just shuttle Bitcoin to somebody like one of my vendors in the Circle P and buy their products directly for Bitcoin. And I can do it using on-chain. I can do it using the Lightning Network. I'm not sure if any of the vendors that are in the Circle P are yet into eCash or Fediment, but if they ever get there, I can use Bitcoin for that too. All right. Saylor's comments about Bitcoin needing legacy financial infrastructure to grow doesn't mean anything. Now, what changes that is only one thing: to make self-custody of Bitcoin illegal. Well, first of all, Saylor can't do that. He can start talking that he wants that. And, it really wouldn't surprise me if he didn't. It wouldn't surprise me if he started talking that way. It wouldn't surprise me one bit if one day I woke up and there was a tweet from Michael Saylor that said something on the order of, we need to stop allowing self-custody of Bitcoin because it's damaging that ecosystem. At that point, it's like I've already lost most of my respect for Saylor. At this point, I'm just neutral. He's a guy that's got more Bitcoin than he should probably have, but I can't do anything about that, which in itself is a testament to the Bitcoin network. I could say the phrase Bitcoin is for enemies, but I don't really need to. I can't stop him, and he can't stop me. There's nothing that he can say that would allow me to not, or that would disallow me to give Soap Miner some sats and him send me soap that he makes by hand. By the way, it's really good soap. If you haven't gotten any of his soap, it's soapminer.com. He's also a Circle P vendor. And even if the United States government made it illegal to hold Bitcoin, to self-custody Bitcoin, for me to give Soap Miner or Oshi or Bitcoin Beans or any of the other vendors that are in my list for the Circle P, how would they know? They won't. They actually won't. They actually wouldn't be able to know unless one of my vendors logged it in as, I know exactly where this came from, and I have his address and I have his name, and I'm going to give that to the authorities. Well, that's an issue between me and Soap Miner, or me and Oshi, or me and Bitcoin Beans, right? But beyond that, there was no way that the government can stop me from using Bitcoin. If they catch me, that's a different deal, but that depends on whether or not they make it illegal to self-custody. And honestly, we're kind of a ways away from that fight, although we should not, under any circumstances, ever think that that's never going to happen. All right, we should always be on the lookout for something like that actually occurring and fight vehemently against it. All right, so I mean that's my stance. But by and large, too many people are putting too much weight on anything Michael Saylor says. It doesn't matter if what he says is stupid, and it doesn't matter if what he says is fairly poignant. He's literally said both during his time in Bitcoin starting in the summer of 2020. But nobody should be putting that much weight on what Michael Saylor says. Let's run the numbers. CNBC, futures and commodities, and everything's okay in Iran. It's going to work this time. So how can I tell something's going on? Well, energy futures, I mean down, and I mean by a lot. Brent North Sea is down 7.6% to 89.39 a barrel. West Texas Intermediate plummeting 7 points to 83.04. Natural gas, not a hedge, 3.59% to the downside, clocking in at 2.76 US Uncle Sam's. Gasoline is down 2% to $3.32 a gallon. And Murban crude, double-digit loss, 12.5 points to 84.85. Metals, as you might expect, are all in the green. Palladium especially up 3.18%. Gold is not up all that much, not as much as I expected, 0.15%, 4,077 an ounce. Platinum up 1.8, but silver is down, but only slightly, $58.84 an ounce. Copper is up a third. Ag is mostly in the red today. Biggest loser appears to be chocolate again, 3.79% in the red. Biggest winner is coffee, 3.7% to the upside. Livestock, cattle's been having a problem lately keeping its prices. Live cattle down a full point, lean hogs down 1.5, feeder cattle down 1.25. And you may ask why? Well, it appears that the United States government has opened up the southern border to Mexico again to let cattle cross, even though they're bringing screwworm over. I'm not sure what the calculus is behind that, other than meat prices are too damn high. We're going into the midterms, and the Republicans have to get something going on because this mess in Iran is not looking good. Republicans have a massive, massive treasury chest to be able to fight in the midterms. It dwarfs the Democrats' treasury chest. Yet I'm just not sure if it's going to be enough for the Republicans to pull it out in the midterms because of the mess going on in the Middle East. Be that as it may, it makes sense that they open up the Mexican border, even if screwworm is going to be coming across along with them, because more cattle means, well, cheaper meat prices. But this is not going to be helping the American rancher. It's just not. And I'm not arguing for higher beef prices. The rancher doesn't really need higher beef prices. What the rancher needs is to make sure that their herd doesn't die from screwworm and any other diseases coming up from the south. But also, herds are at an all-time low because the way that ranching works in the United States is not really conducive to people staying in ranching. So what they have a tendency to do, especially when beef prices are high, is sell off their herds and go do something else. And that's why meat prices remained high, even though the southern border was closed and we were really depending a lot on the American rancher. They just didn't have enough inventory to service the needs of people that want to eat beef to lower the prices of beef in the United States. It's sad, but that's the way it is. S&P, get to the indices here. S&P is down 0.25 point. NASDAQ is down a full point, but the Dow is up 0.25, and the S&P Mini is down 0.25. Bitcoin struggling, $64,490 per coin. It's a $1.29 trillion market cap, and we can only get 15.8 ounces of gold with our one Bitcoin, of which there are 20,061,813.64 of. Average fees per block are unchanged at 0.02 Bitcoin taken in fees on a per block basis. 45 blocks carrying 91,000 unconfirmed transactions waiting to clear at high priority rates of 3 sats per VByte. Low priorities get you in at 1. Another drop in hash rate. We're back down to 869 exahashes per second, but still I remain unconcerned. Your reminder to go to bitcoinandshow.com. That's bitcoinandshow.com. There you can see all the stuff that I'm writing about the Cathedral program. You can see a cut, like most of the time. I think last week I converted 3 shows that I did last week into brief write-ups along with some artwork and a link directly to the actual podcast episode that it came from. The Circle P vendor for that day is in there, so you can get to their shop directly from this particular newsletter. So you can either go to bitcoinandshow.com and just click on whatever you want to see what I'm doing, and you can sign up. I got 3 tiers. One is free, you get everything. The second one is $5 a month, you get everything. And the third one is $50 a year. Those 2 tiers are just for you to be able to show love in terms of fiat on the bitcoinandshow.com website. That's bitcoinandshow.com. I will never, ever give your email away to anybody. I will never sell it. They have to pry it from my cold, dead fingers. But if you want to pay in Bitcoin, the way that I really like doing this is through Podcasting 2.0 and apps like the Fountain app, which you can get at fountain.fm. That's fountain.fm. It's my daily driver. And from Token Ranching, yesterday or Friday's episode of Bitcoin and Progressively Worse sent me a row of sticks 11D11 says, can't wait to start tokenizing individual corn cobs. Thank you. I hear you, man. I hear you. That actually, what he's talking about is tokenizing cows like they're doing in Brazil, which is one of the stories that I brought you Friday last week. Nick Dose with 249 says, cheers, right back at you. Noster Gang with 101 sats says nothing like he normally does. So, donations are low. Sad puppy face. What the hell, dude? I mean, I'm up here. I get up at 5:30 in the morning. By 6:30 in the morning, I've got all the stories that you're going to hear curated so that you don't have to dig through crap. I've done it for you. And then I'm sitting here behind the microphone and I'm recording it. And I mean, while I love my 3 guys over here that always donate to the show, where are you? Huh? And flashing you the sad puppy face. That's the weather report. Welcome to part 2 of the news that you can use, where Coinbase buys nearly 1,000 blockchain patents from IBM. Yeah. Holy shit, Francisco Rodriguez writing for CoinDesk. Stablecoin issuer Circle has acquired nearly 1,000 issued blockchain-anchored patents from IBM, a deal the firm said makes it the largest holder of blockchain patents in the United States. The portfolio spans more than 680 patent families, covering blockchain technology, banking, financial services, insurance, enterprise infrastructure, supply chain verification, and cloud security, according to a press release. The financial terms, however, were not disclosed. IBM was already among the largest U.S. blockchain patent holders before the sale. A December 2025 analysis by patent analytics firm PatSnap credited it with 790 patents alongside Advanced New Technologies and Bank of America. Circle said the portfolio would support USDC, Circle Payments Network, its ARC blockchain, and financial tools designed for AI agents. Circle and IBM also plan to explore further commercial opportunities, the document adds. Quote, intellectual property is critical to advancing our mission and expanding adoption of on-chain infrastructure, said Sarah Wilson, Circle's general counsel and corporate secretary. Circle received its first patent covering parallel blockchain data processing in December 2023. It had earlier joined the LOT network to protect its products from patent assertion firms. The company didn't disclose how many acquired patents were issued in the U.S., whether IBM retained licensing rights, or whether it plans to license or enforce the portfolio. CoinDesk has reached out to Circle for comment, hasn't heard back. Okay, it's that last one. This is what my gut feeling reading this entire article was this last one. Let me read you the whole sentence again. The company did not disclose how many acquired patents were issued in the U.S., whether IBM retained licensing rights, or whether it plans to license or enforce the portfolio. It's enforce the portfolio that I'm looking at. Because my gut reaction to this is, oh shit, it's Craig Wright on steroids. Here it comes. Now, I'm not sure if that's what Circle is intending to do. I mean, that you can, if you're going to be a patent troll, which is what I'm getting at here, generally speaking, you incur a lot of very, very bad blood. It's not a good look. The optics are always bad for the company that tries to do this, or the person involved, like Craig Wright. He was a patent troll, as well as all the rest of the bullshit that he pulled. He was the guy that said that he patented or copyrighted the Bitcoin white paper and then threatened to sue anybody that actually put the paper up on their website. And some websites actually took it down, whereas others actually put it up where it hadn't been before because they were like, yeah, really? Come sue me. But he also did patent trolling where he actually held patents and tried to enforce the patents. And that's what bugs me about the Circle deal with IBM. Except that there's one silver lining here. I don't remember a single case where IBM tried to enforce these patents, even though maybe they could have. It will be up to the future as to whether or not Circle tries to do something differently and become a patent troll. If they do, it is negative press, it's a bad look, and Tether might be able to jump in and, grab some of their U.S. territory from them. I don't expect it. I don't expect Tether to do that, but I'm not sure which way Circle is going to go. I don't like these guys. I don't like Jeremy Allaire. He's the guy behind Circle, and it's kind of infuriating, but we'll have to wait and see. Okay, Claude, let's get into a little bit of AI here. Claude Opus 5 outscores Fable 5 on most benchmarks, but it does so at half the price. Jose Antonio Lanz from Decrypt. Claude Opus 5 is out today. It's cheaper for businesses to run than Anthropic's leading model, Claude Fable 5, which the company had positioned as the everyday frontier product for paying users. What's more, Opus 5 also outperforms it on significant benchmarks. To understand where Opus 5 fits, Anthropic's lineup runs on 4 tiers. Haiku is fast and cheap, Sonnet is mid-range, Opus is the heavy workhorse. Above that sits the Mythos class, a tier Anthropic introduced this spring, which includes Claude Fable 5 for the public and Claude Mythos 5, a version with fewer restrictions reserved through Project Glasswing for vetted cybersecurity researchers and critical infrastructure operators. You can read that as their friends. Fable 5 has had a rough run as a subscriber flagship. It launched June 9th, was pulled globally 3 days later after the U.S. government issued an emergency export control order citing a jailbreak vulnerability, and came back June the 30th only to shift immediately to a credits-only model, no longer included in standard plans. Opus 5 now fills the slot Fable 5 couldn't hold. Lovable, a developer platform with millions of users, ran Opus 5 on its internal evaluations and noted the gains extend beyond raw scores. Quote, "It isn't just better on our hardest agentic coding tasks, up 22% over Opus 4.7. It's steadier, with far less variance run to run," Fabian Hedin said in a statement. It may sound strange, but Opus beats Fable on almost everything that will matter to the everyday user while not being labeled as Mythos class like Fable. On Frontier Bench V0.1, a benchmark that tests whether AI coding agents can complete real software engineering tasks end-to-end, scored as a percentage of tasks passed, Opus 5 hit 43.3%. Fable came in at 33.7%. OpenAI's GPT 5.6 Sol, Anthropic's main commercial rival, scored 34.4%. The widest margin is on Arc AGI 3, a test of genuine problem solving built around novel puzzles a model couldn't have memorized from training data, scored as a percentage of puzzles solved. Opus 5 hit 30.2%, GPT 5.6 hit 7.8%, and Fable 5 wasn't even tested. On GDPVALAA v2, a knowledge work benchmark scored via ELO ratings, the chess-style ranking system used to measure relative performance on real professional tasks, Opus 5 reached 1,861 against Fable 5's 1,747, and GPT 5.6 saw 1,736. Zapier tested Opus 5 on Automation Bench, an evaluation that scores whether a model can carry a full business workflow from start to finish without human help. Their verdict? The model took a raw account health workbook and ran a full churn prevention sequence end to end, flagging at-risk accounts, alerting the right owner, and summarizing for retention ops. Previous models didn't pass. Opus 5 hit 100%. And that's a direct quote, by the way. Anthropic is also pitching Opus 5 as a research upgrade. Ultima Genomics, a DNA sequencing company, said the model, quote, behaves more like a careful scientist than any model we've run. It reaches for the right statistical tests to rule out confounders, cross-checks its own results by independent methods, and stays on track through long multi-step analyses, end quote. That said, these two areas, legal and health, are the only ones in which Fable 5 excels by a tiny margin. The release lands a week after Moonshot AI, a Beijing-based startup backed by Alibaba, unveiled Kimi K3, a 2.8 trillion parameter open weight model that Moonshot described as the world's largest open AI system. Independent benchmarks consistently placed Kimi K3 third overall, behind both Fable 5 and GPT 5.6 Sol, beating those two in specific areas. Opus 5 is now available via API for $5 per million input tokens and $25 per million output. Tokens are the basic unit of information an AI model can process in both input and output. Let me pause right there to make sure that that distinction is known. I think a lot of people are getting confused as to what AI tokens are. They're not what you think they are. They're not shitcoins. They're not those kinds of tokens. It's different. So just keep that in mind. A fast mode running at roughly 2.5 times the default speed is also available, but at twice the base price. $10 per million input tokens and $50 per million output. This release may end the anxiety over Fable 5's lack of public availability. Opus is also available via subscription for everyone. That's the end of the article. But my question is, will the government put an emergency export control order on Opus 5? We don't know yet. They just released it today, as far as we know. All right. Ending with this one from Ezra Reguera, Cointelegraph. Storj files for bankruptcy, explores equity path for token holders. Yeah, that should be fun. Decentralized cloud storage provider Storj Labs has filed for Chapter 11 bankruptcy protection. The company said it plans to keep its network running while restructuring legacy liabilities and exploring an ownership pathway for Storj token holders. On Sunday, Storj said it filed the voluntary case in the U.S. Bankruptcy Court of Northern District of West Virginia. The company said ordinary operations and customer services would continue during the process, subject to court oversight, while its parent company, Invenium, would continue to support the business. The restructuring could become an unusual test of whether utility token holders can participate in the ownership of a company emerging out of bankruptcy. In an open letter to its community, Storj said its liabilities largely predate its current strategy and are just too substantial to resolve through business growth alone. It said the network continues to operate normally and its token's utility is unchanged. Storj showed no significant immediate price reaction following the announcement, trading at around 7 cents United States pennies. That's 7 cents at the time of writing, according to CoinGecko. Storj said management intends to propose a mechanism allowing token holders to participate in the reorganized company's equity. Well, you're going to have to file with the SEC then, dude. However, Storj has not disclosed how token holder eligibility would be determined, whether participation would involve a token snapshot or lockup, or how much equity might be allocated. The company acknowledged that any plan must follow bankruptcy priorities and receive court approval. Cointelegraph reached out to Storj for comment but did not receive a response before publication. Storj is among the crypto industry's longest-running decentralized infrastructure projects. If you remember, if you're old enough to remember, and Storj predates me. I got in 2015. But Storj began in 2014 as an open source peer-to-peer cloud storage project that sought to let users rent storage from other network participants rather than rely on centralized providers. Storj's bankruptcy filing comes in the same month as at least 2 other crypto companies sought Chapter 11 protection. Movement Labs filed under Subchapter 5 on July 15th after months of turmoil linked to its Move token, while Bitcoin mining pool Poolin filed on July the 22nd as it pursued a court-supervised sale of 2 Texas mining sites. BitMEX announced in July that it would shut down after 11 years, while Bitmart said that it would end trading on August the 26th before ceasing operations entirely on January 31st, 2027. Neither exchange announced a bankruptcy filing, with both instead opting for orderly wind downs. All right. So Storj was one of the first shit coins out there. But to their credit, they actually provided a service. You could and still can actually store digital data in a decentralized fashion, at least as far as we know. I've never used Storj myself. And this goes back when I first entered into 2015. The fights back then were completely different. They were about completely different things. We were worried about shit coins. We were worried about altcoins. We were worried about ICOs, or initial coin offerings. But in the midst of that, we were always picking apart whether something might have had actual utility or not. And if it did, why did they choose to use their own token instead of just using Bitcoin? Storj was one of the companies that actually had real utility. There was something there, except that they decided to issue their own token. And that was greed. They had a good idea and they polluted it with greed. And that's why, one of the reasons why Storj just didn't go anywhere. But this brings me to a larger point. Like decentralized storage. What protocol could possibly be out there that would offer you something like decentralized storage? The Nostr protocol. It is called a Blossom relay. And there's a lot more. There's a lot more people that are developers on Nostr that are working around stuff like digital storage. There's Nostr versions of GitHub. There's all kinds of neat stuff, and none of it has anything to do with social media. If you thought that Nostr was just for social media, you'd be wrong. But I blame myself because I keep talking about Nostr, as far as this show is concerned, in terms of social media. Like, oh, I'm on Nostr and I put out a note and somebody wrote back and said this and said that. And I saw this other note and it said this. So we keep forgetting that Nostr as a protocol means it can do a hell of a lot more than just function as some kind of social media thing. It's a decentralized networking protocol. It is a messaging system. Nostr, unlike Bitcoin, doesn't care how big that message is. Generally speaking, I mean, some clients, will puke on on a lot of Nostr data. Other clients are designed to do that. But by and large, it completely takes the place of something like Storj, or could, and people are working in that direction. And that brings me to another thing. Like, let's go back to 2014, 2015, 2016, at the height of shitcoinery and ICOs and forks and knives and all kinds of shit. Back then, something like that I brought you earlier in the show, Workstr, app.workstr.fit, like I told you about. I don't remember anybody actually building that as a blockchain, but it wouldn't have surprised me. It would not have surprised me. And they would have had their own token to go along with it. And they would have said, our workout logging, application is blockchain. So your workouts will forever be embedded on the blockchain, like you ever needed it. But I guarantee you, if it had happened back then, I wouldn't have been surprised. And I also wouldn't be surprised if it actually did occur, that somebody did make a workout app and it was blockchain based and they had their own token, and I just didn't hear about it, yeah, that wouldn't surprise me either. If you happen to know of something like that back in the shitcoin era, then please let me know, but I don't remember it myself. So what's the takeaway here is that Nostr slowly, surely, and almost covertly, where nobody can really see because nobody's really looking because everybody went back to X, right, is able to build everything that the shitcoiners were trying to build. Except that the native token for Nostr is Bitcoin. Either on-chain, Lightning Network, eCash, Fediment, it doesn't matter. It's all Bitcoin. And Fediment will, yes, I know, is going to be offering stable coins, and I don't know about eCash, but Fediment definitely. That doesn't really bother me that much because stable coins don't solve the fundamental problem of inflation. Be that as it may, I go back and I start looking at all these projects that some of them actually had real utility back in the shitcoin days, and they were all polluted with greed by flashing and spinning up their own token, hoping that they were going to be able to walk away, drop their bags on unsuspecting plebs, and then go sip Mai Tais on a beach somewhere. But their initial idea, what they were trying to solve, was a good idea. Slock was a good idea. And if you don't know what I'm talking about, if you've ever heard anybody talk about the Ethereum fork back in 2015, or it was also called the DAO hack, DAO, Decentralized Autonomous Organization. The DAO hack I think it was 2015 on Ethereum, and it forced a hard fork of that protocol, and you got something called Ethereum Classic out of it. The deal was they rolled back the entire blockchain to right before the DAO hack occurred. But the DAO hack occurred because of Slockit. What was going on is that people on the Ethereum protocol or whatever they were voting on whether or not to fund the Slockit guys' project. It was sort of like crowdfunding and Shark Tank all wrapped up into one kind of thing, right? And they had decided to fund Slockit, and then shortly after that, the DAO hack occurred, and everything got rolled back, and I believe Slockit lost their funding. They were going to get funded, and then all of a sudden they weren't. But the idea was that a physical lock for a door, and it could probably be for a bicycle lock. I'm sure that they had all kinds of plans, but just think about a door lock on an Airbnb. Had no keyhole. The only way to open it was to literally buy, Ethereum, send an Ethereum transaction that represented the rental price for that property, and then Slockit would send you a use code for your phone, and that you would use your phone to unlock the door through, I don't know, Wi-Fi or Bluetooth or whatever it was. I can't remember exactly how they did it, but it negated the need for key cards, and it negated the need for keys, so that anybody anywhere would supposedly be able to rent like an Airbnb with a Slockit on it, and they wouldn't need to look for keys in a mailbox or under a mat. It actually had real utility. Slockit is still a decent idea, although I would never have one on my house because of digital hacks. But if I had an Airbnb, if I was an Airbnb owner, I would definitely use something like that. Absolutely. But it got hacked. But Slockit could come back as on the Nostr protocol and use Bitcoin. In fact, when I go back and I look at Storj and I look at Slockit and I look at several other fairly decent ideas that were generated back in the day, but greed polluted it with shitcoinery, those were good ideas, and they could all be brought back to life all on Nostr protocol, using Bitcoin as the native currency. So I know that people are kind of like, oh my God, Nostr's dead. No, it's not. It's not dead. As social media, it is not functioning all that well. And it's, and functioning all that well insofar as not just how it works and ease of use and stuff not making you pissed off, but people just like going back to Twitter, going back to TikTok, because all the social media people, they know those platforms. Breaking that network effect is very, very hard. It's very, very hard for Bitcoin to break the network effect of the dollar and the legacy financial system too. So it's experiencing the exact same thing. I really think that the Nostr protocol's future lies in stuff like Storj, stuff like Workstr.fit. I mean, if you go to Workstr or app.workstr.fit, it's a great interface. It's pretty smooth. It works pretty well. I haven't tested it all the way front, back, and forward. I'm going to go to the gym today and I'm going to give it a run for its money and see exactly what happens on the other end. I just found it, this was yesterday, so I didn't really have time to go to the gym and fully test it. But it don't cost no money, so you might as well try it out. But the interface is nice. The color selection is nice. It's easy on the eyes. It's pretty much in dark mode. The buttons work. It seems like it's pretty solid. And it doesn't need its own token. If they ever decide to charge for it, or if they ever offer something inside of that app that charges money, they'll just use Bitcoin, I'm pretty sure. Because it would be a hell of a lot easier to do it that way, since it's the native token of Nostr, than it would be to spin up a shitcoin and try to plug it into Nostr. So go give Workstr.fit a try. At least just open it up and look at it. Play around with it. And then let the guys on Nostr, the Workstr guys on Nostr, know whether you like it or not. And I'll see you on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.